tighter than a... never mind.
Bruh.
So assuming this is the break-even line on the day, What's up, guys? Today we have an incredible video where I am reviewing the live trading recording of a fellow member in this community. That member is HeavenwithaD. He has been here since day one. He is the most OG person here. He has seniority over all of you guys, okay? And he has asked me to review his live trading recording where unfortunately he hit max loss. So I'm gonna give some of my comments on what I would have done differently, what he did well. I'm bound to step on some toes, but hopefully you guys learn something from this video. So let's get into it. Guys, so here's the recording of HeavenwithaD's trading on Friday. Now, right off the bat, the thing that I noticed was that he's already down 500 bucks. And when I look back at some of my biggest red days, some of my most frustrating red days, they started out as small red days. So market opens and he's take quick scalps here and there. He's down 245 bucks, red 700 about on ATXI, green 421 on MINM. Now, right away, we can see prices are not just going straight up like we've been seeing. They're popping up and then dropping. Look at that drop on MINM. Really hard rejection there. That's your first indication, at least when I'm looking at it, that the buyers are not quite as strong as they have been. So right away in the first minute of the day with MINM, we're getting that rejection at 533. We did not get up to 564, which would be a key level for this to break. And in fact, even pre-market had a topping tail rejection, hard sell-off. We do get a nice rebound off the low that kind of gives you this idea that buyers are still strong. But again, up to 520, bid drops. It's coming back down to 509, even $5 a share. This thing is shaky. ATXI, I don't mind the pattern. It's a 1 minute micro pullback with a 5 minute bottoming tail. He ends up cutting it. I think that was the right call. The pattern looked good, but we just weren't getting that quick break, right? It's either it breaks and you're making money or you're out. Okay, here at 708, Heaven takes another micro 1 minute pullback here. Very micro, 1 bar micro pullback for the break through the whole dollar. Now this trade, I felt like he could have cut a little sooner because again, it either works or it doesn't. It does fight here to go back up, but we're seeing again sellers popping in and bringing it down. And again, going back to the first candle of the day on MINN, that hard rejection, and there you go. We get another quick rejection, and we go from being small red to now red 700. He goes back in for the quick dip buy. These kind of trades I do, but it's either they pop back up hard and quickly or they don't. And in this case, it pops up a little bit up to 480, but it's struggling. And we got the next 1 minute candle here starting. Sellers, one here, one here. Buyers just were not stepping up there to buy. Unfortunately, Heaven had the right idea because this thing does end up curling, creating a W pattern, and it rips back up after putting in some bottoming tails here. Very choppy, rips back up through 5. This is where Heaven has a nice little renaissance. He comes back and he actually at this moment goes green on the day. I believe it's the only moment he was green. And unfortunately, we do get a pretty harsh rejection. I would have sold right there at 514. I would have put my order on the ask. Because now look at the 1 minute chart. 1 minute chart looks extended, but the 5 minute chart does look good, minus this doji rejection candle, minus this rejection. So in this case, he took another 2,000 shares up here. I just wouldn't, because the 1 minute pattern is too extended, and we've flushed here, and when this thing flushes, it flushes hard. We flushed here, we flushed here, and now he has an entry way up here at 512. Luckily not a 5,000 share entry. Unfortunately it takes a little bit of a bigger loss there, and I felt like even if the 5 minute looks good but the 1 minute is extended, I would naturally wait for a 1 minute pullback. In this case, we get a 1 minute flush. He goes in for a quick dip trade, but buyers are against the wall on their knees. The shorts are whipping us with a belt, and it takes the stock below 455. And it's just it's these sellers, just like on breakouts, it can keep going and going higher. When the sellers get in control, it can just keep going lower and lower, and you can try to buy the dips. But right away here, guys, 12 minutes in the day, down 1,400 bucks. I don't know what his max loss is, but as I personally start to approach max loss, which for me is 2,000 to 2,500, I dial my share size back, I pump the brakes, and I take this as a warning sign that this is one of those unfortunate red days. A very real fact of day trading is being red. And right away, this is my first indication. His trades were, not the worst. But at this point, I feel like I've seen a shift in the way he traded. He started jumping into this ticker and that ticker. And I think it just created this snowball emotional effect. I just wish that he would have just cut it at $1,500 red. But I can understand how emotions can get to a trader. And quite frankly, I wish he would have told me what his max loss was, because we need to know your max loss, and you need to know your max loss. One of the most important rules. To 15 minutes in, he's down $2,000. He takes a 3,000 share trade on OMGA, which it's not a huge amount of risk. But again, here's an instance of buying. I felt an extended 1 minute pattern up at 560. He was obviously looking for the continuation higher, but the problem with this pattern is, look at the 5 minute chart. We got the 5 minute topping tail, just like on MINM. We're seeing these rejections at the highs. Rejection on this stock, rejection on this stock. He's taking an entry up here at 560. Luckily, he cut it, because look at this thing, dumps all the way down to 540. Some incredible range on this. He dodged a bullet, but he still took a bit of a loss. I think he was just buying a little too high. So here we're 25 minutes into the day, and this is where I feel like the market did come back a little bit, and Heaven actually started to get some profit. He does clean up his red day pretty nicely. And so here's a great trade. We got the 5 minute rebound back through VWAP. We got the double bottom 1 minute. We got the breakout. He's up $355. With this trade, I would have liked to have seen him start to take profit sooner, because it did chop around quite a bit, taking into account that the other small cap stocks have been flushing at the highs. We have ATXI here high, not high a day, but pretty extended on the 1 minute chart. It's been green for a while. And he's still full 29,000 shares here, and he hasn't taken any profit. And I just feel like, there you go. There's your topping tail. Now he's selling it for a way lower of a price. Try to sell into the buying pressure. Don't wait for the selling pressure. And again, everybody trades differently. In a hotter market, that very well could have taken off from 31 cents, 32 cents to through 38 and up to 40. But again, ebb and flow of the market. I take the route of taking profits earlier, but that does mean I do miss out on some of those big breakouts. But when the market does slow down, taking that profit quicker pays off. You avoid the flushes and you lock in some money. But I try to keep things as consistent and steady and mediocre. I like to be able to sleep at night. I don't like to be up all night thinking about false breakouts and flushes and losing money. To 43 minutes into the recording, and that's not even including the pre-market trading, he has a nice rebound. He starts making money on MINM, JFBR. He's break even. He has his loss down at one point even to $700. And I think this was the point that he should have considered shutting down, especially when he started to crack below $1,000 red on the day. You're almost an hour into the day. $1,000 red is not a big red day. We're not seeing those quick breakouts. We're seeing flushes. We're seeing topping tails. Here he takes some trades on MINM. They do, result in some wins. But then very quickly things turn again, and he starts taking some losses again, getting caught in a lot of tricky trades. And I'm not saying a lot of his trades were bad. I'm just saying the market just was not supporting. And so he just started to snowball again. And next thing you know, he's back down 2,000. I feel like this is where things really started to fall apart, and I would be frustrated, as anybody would. And this is where discipline really is what keeps you from blowing up your account, doubling your max loss, blowing up a month's progress. You can become triggered so fast, and it comes on when you least expect it. And I just feel like since he's been on a little bit of a losing streak, he was in a little bit of a denial of the fact that today was just not his day. The stocks today were just not performing exactly how he likes to trade, and that's just the way it's going to be. You're going to be read at least one day a week on average. Okay, so at this point, I think this would have been a great spot to cut it. HeavenwithaD keeps trading, and he ends up coming all the way down to 3,000 red. I know it sucks when you're red to use small size because you think that you're not going to be able to go back green, and that's probably true. But what's more important, we talk about this in Trading Farmer Plus in our Predicting Our Red Days, the profitability equation. There's two sides to the equation. The most important side, the more important side, is the not losing money side of the equation. And so that's the whole point of sizing down to keep these red days as tight as possible. Tighter than never mind. Oh, I was going to show you one more thing. So assuming this is the break-even line on the day, HeavenwithaD started the day like this, right? Down 500, down 1,000. Then he kept going. He had a nice rebound. This was the rebound to up 700. Now that would have been a good spot to cut it because he was already about 25 minutes, 30 minutes into the day. And so that would have been maybe a great spot. And I've done it that way. I've done it so many different ways. That would have been a great spot to cut it. Now, for sure, and I think there's no debate about it, that when he did come back to where he was after his recovery to 700, that at 2,000 should have been where he cut it. It should have been a $2,000 red day at most. He had plenty of opportunity. This is 2K. 2K down there, okay? That would have been a great spot to cut it. Negative 700 would have been better. But in this case, he keeps trading again with 5,000 shares, big size, in my opinion. And I just would have liked to see him go into a defensive mode of trading to avoid this. I can't even draw low enough, but this would be minus 3K or 3,200 wherever he finished the day off. Profitability isn't always about the patterns. It's a big part of it, but it's also about risk management. I think today, whether it was not respecting max loss, maybe it was compromised emotions. Either way, I just felt like there was not a great management of risk. And, you know, unfortunately, it looks like he does keep trading here. His P&L goes off the, so I don't even know what he's at, but he has 3,000 shares here at 570 on OMGA. Again, looking not so good right here. I don't know if it goes green or not. It's a 5-minute bull flag over here, but it's struggling to go up. On a day like this, I would probably cut it there at 566 and shut it down. So I don't know what happens here with this. But anyways, guys, hopefully you learned something from this video. Even traders as good as HeavenwithaD, even traders that have been trading a long time, they can get frustrated. And you can dig your heels in and start to get aggressive or stay aggressive even on days where it doesn't make sense. Shout out to HeavenwithaD for allowing me to review his trades. I appreciate it. All right. If you want to join the Discord, link is in the description. Take it easy, guys.